Yeah, yeah. Are you on your chat now?
Yeah, I'm on my chat. I'm on a chat with the PC. So I can see you're on 75, ne? Yeah, I can see.
Yeah. I don't know, but I'm gonna start by asking, what are your struggles? Like, what do you find?
Mostly my targets, you know, and some of my entries. So what I use, I use support and resistance kakhulu, and then sometimes I identify shapes.
Okay.
Yeah.
Okay, support and resistance, but then support and resistance alone, it won't work. So you have to have. Do you have a journal only?
Yeah, I do have a journal.
Yeah, you have to like write down your rules, ne? Support and resistance alone, and then with those patterns and all that, is not gonna work. So
Okay, well, hold on.
what you have
let
to
me
do?
go grab my.
Okay.
Yeah. I'm gonna just take out my journal as well and put it close so I can write down these notes that you're telling me. Because I do have a journal.
Good.
I don't want this one. And what I need a pen. A ball in trouble. Just hold on, Chief. I just need to get another pen now.
Yeah, no.
My trusted pen is failing me. I use it every day. Namhlanje ngenzile umhlolo. Silent Satana left backup. Okay.
Yeah, you have
Got
to
another pen.
you have to have rules, né? These rules will help you a lot. So what you have to do? I call it a CEST strategy. It depends on how you set it up. But once you have the C, you have an E, you have an S, you have a T. It's a ZEST strategy. So the C stands for conditions of the market, right?
Okay.
And then the E stands for entries, right?
So your C stands for?
The C stands for condition of the market. The C is the first
Okay.
thing that
Yeah, so
the first thing that you look for when you open your chart is the conditions of the market.
okay. So that's the first thing, all right?
Yes. The second thing you're gonna have to look after the conditions is your entry level. Your entry levels. That's the other thing that you look at. And entry reasons.
Okay. Entry levels and
reasons.
exits.
No, reasons.
Oh, reasons.
Yes.
So at least you must have run about how many reasons? At least 3 reasons to enter the market.
You have to have you have to have main reason, and you have to have the main reason, only one main reason, and then you have to have the confluence that supports the main reason. You don't have to have many reasons to enter. If you have one main reason and then a confluence of other reasons to support your main reason, but you don't have to have many main reasons. I don't know if I make sense.
You are making sense.
Okay.
So pretty much it's the main reason and the supporting structure for why is it like that.
Yes, true. Yeah, you understand. And then the
Yeah.
second one is the S, the stops.
So are you talking about stop losses here?
Yes, stop
about
target,
the stops.
stop losses. Yes, stop losses. The S is for stop losses. You determine your stop losses. And then the T is for targets. You have to determine your targets. Once you have all these 4 conditions met, I'm telling you, my brother, you will never lose in the market again when you follow these 4 things. So how you determine that you get these 4 things, né? Let's take a look at the chart. Now I'm gonna say, let's find the first one, né? Conditions.
Okay.
Let's say, let's go look for, okay, let's set them before we look for them. Let's say our conditions that we're gonna look for, we're gonna say we're looking for trend, right?
So I believe trend, you need to go to a higher time frame, as you've said, né?
Yeah. No, I just want us to go through these 4 things before we check the market.
Oh, okay.
Yes, I'm saying the first one, the conditions, we're going to look for trend.
Okay.
And structure. And how, structure is, it's like how the market is. That's structure. So the first one, we're going to look for trend and structure, 5. And then the second one is entries. So let's say our entries on Vix75. My entries are not the same on all markets, but
that's true.
Yeah, my entries are not the same, but on Vix75, it gives proper entries when you look for double tops and double bottoms. Trust me.
Okay.
And then some markets will give you good entries when you look for head and shoulders. Some market will give you proper entries when you look for triangles, flags, but now on this one, you're gonna look for double tops and double bottoms.
Okay, double tops and double bottom. DT and DBs, okay.
Yes. And then our stops, it's gonna be determined by, because now I don't want us to get into the mathematics. I'm using ATR most of the time to determine my closest small, tight stop losses. Né?
Yes, that's what I want.
Which I will teach you when we progress. But now I just want to teach you how to look at the market and how to determine things. Okay. For now, what the stop loss that we're gonna use is the previous high, né? Or previous low.
Yes.
Yeah. So I'm also writing this so that we do this together.
Yeah, I'm writing. I can hear you also busy on the side.
Our target, né? Our target will be the second high or the second previous low, né?
So your targets will be the second, not the first one, né? Second
not
high.
The first one, the second one.
Second high or low.
Yes. So now we've got
all. Are we looking at the second high and low? Are we looking at the resistance level when you're talking about the second high and low?
Yes, we're talking about the resistance. Yes.
Okay.
So I'm gonna show you how we do it. Now that we've got all these rules, we call them rules-based strategies.
Okay.
The first thing that you do, you take your journal, you open it, you open your laptop, you look at the conditions that you've set for your rules. You don't just play straight because you say, hey, now the black candle is long. Let me say sell. You don't do that.
You first analyze and get the condition.
You first check your conditions. Now let me do this. We're going to 4 hours because I normally check my structure and everything on 4 hours. So here we are in 4 hours. You see it, né?
I'm watching everything. I'm watching.
All right. We're on 4 hours. Fine. So as we said, we're looking for trend. So I'm gonna take my my lines here. You see, I'm gonna check which was the previous high. I'm not gonna use this one because it's far from the market. And this one also is the previous one, but this one is the recent before this one. So I'm gonna connect my recent one. As long as I have 2 touches like this is a trend for me. I'm not gonna count any of these ones here from here. You see?
Because the market is way, way, way past that line.
Yes, the market is way too far from it and it doesn't link, but it does link to this one. So I'm not going to use it because of it passes this previous one. So I'm gonna link this one to the recent one. So already I have 2 touches. This is the trend for me.
Okay, and then like that, you already see the trend.
Yes,
it's a downtrend.
Yes, it's a downtrend for me. And then I'm gonna link the bottom ones. I'm not gonna connect this one. I'm gonna connect these 2 because it's 2 touches already. So if these 2 touches give me another touch on the low, then it's a trend for me. So I'm gonna align this trend with the top trend. So this is what I get.
So you always look. Sorry, just 1 second. So you're always looking for 2 charges, né?
Yeah,
They're on the previous highs and lows.
Yes, you look for 2 touches. The recent market, because this data is not going to help you now. It's already gone. This one.
Yes, it's true.
It's not going to help you with anything. So the recent one is the one that helps you. Yeah, this is the recent data that you need to look at.
Okay, it makes sense. Makes 100% sense.
So you got the trend. I've got the structure. The trend is telling me I'm going downwards. Now I'm looking at structure. Structure, it means my support and resistances, right?
Okay, hold on, let me write that down. Structure, support, and resistance. So that's what, when you say structure, that's what you mean.
Yes, because I've got trend now. I know that I'm on a downtrend.
Okay.
And I've got structure now. We haven't found our structure, but yeah, I know that I have it's a downtrend. I'm gonna look for structure.
Yes.
Yes. Now.
And we can both see that it's a downtrend.
Yes, the transition. We've already identified one thing on our conditions. Trend. Now we're looking for structure. So with our structure, we do this. We do this with our structure. We look for support. This is a support. This is a resistance here. Already I see it. It's a resistance level, and then I've got another resistance here. So I only have 2 on this downtrend. What I'm looking at. I'm not gonna draw resistance all over like this. I'm not gonna draw resistance here, resistance here, resistance here. It doesn't help me with anything.
Okay, that's true.
So
that's true because you're looking for the
recent
one.
Yes, recent ones. So
with your support and resistance, you draw it on the week, nah?
On the week, yes. On the week, yes. On the weeks. And then I'm gonna show you.
So the bottom one is cutting. Oh, okay, yeah, it makes sense. I see on the bottom one.
It's cutting.
But you can see why it's cutting. But on the other side, the recent one, right there in the front.
The recent one. I'm not looking at these 2. I'm looking at the recent one.
Okay.
Yes.
But
I'll show you how we do it. These ones, they will also help me in future. You'll see how I align them. You'll see. Because now I'm just looking for trend and structure. This is what I get. Fine. I've got 2 conditions met. I've got all my conditions on this. So now I'm going to my 1 hour where I'm looking for entries and stops.
Okay.
Because I've got my conditions, I've got my structure. So now I'm going to teach you how to do these entries and stops. You see how those okay, now we're good. I just wanted to show you how these 2 will help you. You see those 2 that I left out.
Yeah, I can see. You're on a 1 hour frame now, né?
Yeah, now I'm on a 1 hour frame now. This is a zone. This is a zone. On the 1 hour, you get your zone. This is a zone. It's a zone.
Now I see.
It's a
Now
zone.
I see how you get your zones.
Yes. You see. So your zones have to be like accurate. You touch the wicks of that major support where you took from H4, ne? And then on H1 you put your block on the wicks also, on the bodies here. You see, then you get your zone. Get your zone.
Right on the body.
Yes, right on the bodies.
Oh, okay. So when you do zones, you don't put on wicks, you put on bodies.
When you do zones, you put on bodies. Yes.
Okay, makes sense. Makes sense. I'm with you. I'm with you.
So, okay, left it behind. Where is it? This one I wanted to show you. Also, it was on. So you take your block, move with it, because you cannot start it from that side. So you move with it to the recent market now.
Okay.
So that zone you got from that other side is here. This is exactly the market from previous data. So
yes, that's correct.
Yes, looking at it now, it shows me that in a downtrend, the market has reached our zone. This is where you can get an entry reason right now on a live market like this. You can use this now to trade now. If we can place a trade now, it will be the most valuable trade now, because of already we've got trend, we've got structure.
Trend is downtrend, structure. There's the structure there.
I've got my entry reasons because of market is at our area of value. So we've set our entry is double tops and double bottoms. So if you look at this market now,
it's a good entry.
Let me do this. It gives us this top and this top.
Yes.
The double top. Because of we are in the zone. Yeah, this is the zone that we're looking at.
So that's where our double top is. And then you say that you enter after the second candle has closed, isn't it?
Yes. You enter on. So you see if you get the double top like that, ne?
Yes.
One. It's your one. It's your two.
One.
So
yes,
here you can enter on this candle. But now, because of already it has pulled down, you're gonna wait for it to come back. Because of you want a clear entry. Maybe if your entry is here, then you're fine. You don't enter here. Here you're too low. You're too far from the market. If you missed it, you don't get in. You leave it like this. You don't get in unless you set a buy limit here. You don't get immediately here. You set a limit, a stop here above. Then it comes your way, it clicks you in, then it's gonna come to this level.
All the way down.
Yes. You see it.
So where you've drawn your line, is that where your take profit would be? Your target.
Yes, my target on this one wouldn't be here because this is the first low. This would be my target.
The second one.
Second one, yes. Because I'll be looking for a sell. This market might do this and this come back to this area. And then we test this level before shooting up.
Okay, now I see what you see. I see exactly what you see now.
So, but this is not the only thing you look for. Let me show you.
Yes.
Let me show you another thing to look for. So you plan. This is how you plan trades. Because of already we know if the market comes here, we sell, right?
Yes.
The plan, you're already planning it. You've got your conditions, but then you're gonna write your plan on the other side, because it's your journal, you're saying today's trade. If the market comes to, what is this area? 5. If the market comes to 5, what? I'm gonna sell here. But already you've got the reasons to enter this market. It was rejected once, twice, now 3 times, and then it comes to you, you get the market, you enter here. You get it?
So when you enter in the zone.
Yes, you enter in the zone or just below the zone.
Okay.
But now another thing that you have to look at is this. Because of we're planning now, you're planning the market.
Yes.
So the other, you've got your sell reasons. Now you're looking for your buy reasons. Let me show you how to do it. Because already you've got your sell reasons, right?
Yes.
How are you gonna say? I know my conditions. Now I'm gonna look for entries. The trend is down and all, but there are trends in trends. You see, this is also a condition. You wanna say this is a trend. And this is a trend. So
I see it.
Looking at this already, I know that this pattern is a flag. It's a descending flag.
It's a. Oh, okay. Yes, I can see the pattern.
The market,
that raising wedge is going to go smaller and it's going to break. Then it's going to go down.
The market comes from the downtrend, and then it gives you a flag.
A flag.
You see, this is a bearish pattern, because if it breaks to the downside.
Yes.
All the time. If you can check all the books that you have read and everything, this pattern breaks to the downside.
It continues with the trend. So it goes down, pulls up, and it continues with the trend.
Yes. So with that said, we're not looking for that, because I don't want to confuse you. You already have your conditions, right? So what you're gonna do, you're gonna say now, I'm looking for bias reasons. Okay, you set your trend lines like that. This is an area where you can say the market is here. Which one? The market is at this an area of this here. This is an area of this. So what you're gonna look at is if the market comes to my area. If the market comes to my area, here, I'm gonna look for a double bottom like this.
Okay, it makes sense.
So you have 2 scenarios that you always have to look at, because already you know your trend. You understand?
Is it downtrend? Yes.
Already you know your trend is downtrend. So
when you analyze, you analyze.
Here you're still in a downtrend, but there's trends in trend. Understand? Because if you check
pullbacks.
Yes, this is a pullback. It might be a pullback from here until here. It might be like this. Because this is our trend. This is our major trend. This. So this market might still do this.
And then come down or change structure.
And then breaks to the downside. Yes.
Okay.
So that's what you look at when you trade. You don't enter the market without analyzing every possibility of the market. So now here on this area, because I always use this as my area of view. You see, from the body, to another body here. Then I know that's this is my area where I'm going to look for double bottoms from this market. here. And then let me show you this. This is where I'm going to look for the market to come in, give me that double bottom, then shoot up, retest again.
Obviously, then, yeah, because it's going to come down, retest the flag trend line, come back down, and then shoot up.
Yes, yes, most definitely. My stop loss always will be here.
It's 13 hours.
Because I know, because I know if market, let me do this. If market breaks, and okay, let me say if market does this, and then breaks, I'm wrong. I know that I'm wrong. Market will break, come back, and then go down.
True. I see.
Yes. So these are the scenarios that I look at. But I know that I have my zone here. Where I'm going to be waiting for the market to come from here to this area, and then to my TP.
Okay, so tell me, when the market, let's say scenario, the market goes up and makes that double top, which entry, when is your entry? Is that on the after the second candle has closed, after the double top, or when is it that you enter?
No, when the second, okay, let me show you here. Let me find the proper double top. Okay, look at this one here. This is a proper one. Eh?
Yeah, that's a proper double top.
Market dip this, ne?
Yes.
So on this one, where is it? Sorry about that. Yeah, sorry. Looking for this black color. On this, you see the white one?
Yes.
Don't enter there. The second black one, you enter at the close of it here. You wait for it to close in a different color because of it has to confirm that we are going down. It has to confirm. But if it closes white, then it's not a proper double top.
Okay. So there it was a nice confirmation because of the engulfing as well.
Yeah, because the engulfing as well. Always it has to engulf. Always. It has to. So on the second, on the close, you enter. Then you can put your stop loss right above it. There's nothing that came. There's nothing. It did exactly. Because of all the times, if it comes here and breaks above, you are wrong. I know VIX is like that. It doesn't go. If it breaks, you are wrong. You see, then
I know because it's very volatile. It doesn't really follow structure to the T. It's very, very volatile.
Yes, it's gonna always do as long as you're following it in a trend. The trend has to be down, and then your structure has to be aligned. Because even here, it was a proper sell here. I think we got it. It's the one that I posted on that other group. We got it here. Then it was a sell. And then here was the buy that we took, that you saw.
Yes.
That I posted on the other group. This was the close of the candle.
Yeah, I saw that you were looking at a 15 minutes thing.
Yes. This is the close, and then we entered here, and then we never. You see, the most important thing about this, you don't suffer the reds. You don't struggle and say it's in the reds. You're always in the blues.
That's the nice thing about it.
Yeah, that's the nice. You don't stress a lot about how long is it gonna be on the red now, on the red side? No, it takes few minutes after the entry. You entered. Always on the blues. You can enter even when it pulls back here. you're still in the blues. You can still enter until, you see, it gives you the right.
And shoots up.
Yes. So that's how simple it is with Vix. But with others, we'll keep on, I'll keep on teaching you Vix 100 also. You don't trade it like the way I trade this. It has
So okay, so every volatility has its own
yes
trading index as well.
They don't look the same. You don't trade them the same. They don't look the same, and then they don't react to certain patterns the same. Vix75 respects double tops and double bottoms all its life. You can go back 100 years or how many years back testing it, it will tell you double tops, double tops. But if you look for flags, you look for what, you're gonna lose a lot of money. So
okay.
I don't know
if
you have questions for now, so that we can go maybe in 5 minutes.
No. I'm still good. I'm still understanding everything right now. I'm still with you.
Yeah. This was just the beginning of the course. You'll understand a lot of things. I fed you a lot of information, but in a small time. But still.
It's good. Don't worry. You can stretch the mind. The mind can be stretched. It can be stretched. Yeah. It's not a problem.
But yeah, this is it, man. Because if you don't find your reasons here on 1 hour, you can still go to the lower time frame. If everything is unclear for you there, you can still go to a lower time frame for proper small entries. Because of here you would have entered maybe here on that 1 hour. You have entered maybe here on this level. But you see, on 15 minutes, you can enter
even there.
Yeah, because of you've got 1, 2 already. It's a valid on 5 minutes. It's a valid double top. It gives you an entry here.
Yeah, I can see with those 2 weeks. If you push it to a smaller time frame,
yeah,
there will be a double top.
Give you proper double top. Then you enter there. Then you go. This is the market. But now you see the market is coming to that area that we spoke about. So if the market comes to that area here,
which means it wants to respect your thing, your flag pattern, and then break down.
Let me see this area here. Because of, let me show you what you don't see. This is a head. This is a shoulder. This is a head. It might come.
Oh, another shoulder.
See it?
Yeah, I see it 100%.
So that's why I said from that other side, from 1 hour, if you wait for market to come to that area, you can look for a double bottom, a double top, and then it's gonna shoot down. Or even if you want to look for a double top, you can look for a candle pattern, because already on the 1 hour, it has given you the double top. You have that top on this side, you have this top on 1 hour. And then the pullback, you can wait for a candlestick pattern, maybe let's say an engulfing candle like this, then you enter your market.
Engulfing.
Yes. Or you can look for a shooting star, a hammer, or whatever, and you enter.
Okay.
As long as it doesn't break above this high.
I see it. Because if it breaks above that high, it's no longer even going to be a head and shoulders.
Yes, it's no longer valid. Now you can look for buyers from here. If it breaks above and closes like that, then you can look for the retest, maybe, and you should buy.
Okay.
So looking at the market in different angles, not just one thing, because people are forcing the market. Now, someone can sell here. Now, someone will sell here. Let's say market goes up. Say, I'm selling again here. Market pushes up. And say, let me sell again here. Market pushes up. The person gives up, then the market sells.
So you allow the market to do what it needs to do.
Allow the market to come to you. You see, if you have reasons for market to come to you, you say, it's coming to me. Here is where I'm selling. Then you sell. It doesn't go your way. You reevaluate again. You look at the market, you say, okay, this area is also an area of value. Let me wait for market to give me a double top. Then the market does this, then comes back, then does this. Then this is the reason. You say, okay, market is rejecting. I'm entering again. You enter.
Okay.
You see.
So with Vix75, just stick on double tops and double bottoms, nothing else.
Yeah, nothing else. Don't look for this flag, what, or the breakouts or something like this. You're not getting it all the times. This breakouts, what. You can get it, but then look at them. They are not as clear as you can get them on.
They are not consistent as well.
On currencies or on whatever. You see.
Yeah, here they're not very clear.
So double tops, double bottoms are the best here.
Because I can see here where you drew as well, there's a nice double bottom.
Yes, yes. All right, man.
Clear.
As long as you're good, I'm good. We can end the session, but we keep on communicating on the other side.